Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for July 1st, Friday. It is 6:26 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin up 3%. Oil up 2%. Equities are pretty much flat. Nat gas is up 5% after being down almost 20% yesterday. Macro front, we've got some PMI and ISM manufacturing numbers this morning. Also, don't forget, we've got a 3-day holiday weekend again for July 4th. And nothing on the board today for earnings. Looking ahead to July, we've got a OPEX on July 15th. We've got the FOMC next meeting, I think is July 27th. And then we've got Jackson Hole in August. And then we'll be into the fall. So things are moving right along. And I'm sure you noticed the title for today's video is they don't end the game at halftime, right? You don't win at halftime and you don't lose at halftime. And so now with that dreadful first half behind us, we can reset the table, get into the locker room, circle the wagons, and get ready for the second half of the year. And I think this weekend is a perfect time to kind of reassess where you're at. Been a very difficult year. A lot of pro money out there that just doing terrible. So if you're behind where you need to be, I would not go ballistic on yourself. That's not gonna help anything going forward. What I would do is try to be very objective about it. Were you trading too big? Were you directionally wrong? Just try to break it down into actual, were you sticking to your discipline and your plan? Were you all over the place? And what I like to do, whether it's a tough market or a trading slump, we all go through them, is to, go smaller, take the risk down, and just try to hit some singles, to use the baseball metaphor, or to get a couple first downs, move the chains, and then when you build that confidence back, then I think you're going to be in a much better position going into the fall. Actually, if you go on the blog site, you'll see I wrote a whole blog piece on rebuilding confidence. There may be some things in there. In fact, I can almost assure you there are some things in there that can help you if you're feeling a little bit disappointed or lacking confidence going forward in the second half. And just remember, plenty of stories out there in all walks of life where things weren't looking too good at halftime, and people, teams finished strong. And no awards are given out at halftime. It's only at the end of the year. So I think there's plenty of time. Just don't get into that mentality of trying to catch up by August 15th, because that's not going to happen. You just got to chip away, and then see where things end up at the end of the year. So let's get into our charts. Just revisiting our oscillators right in the middle of the range. Not, we had the big excursion to the upside then they pulled the rug, and now we had a little bounce, and now we're back towards the middle of the range. Not particularly helpful in that regard. Same thing on the NASDAQ, right in the middle of the range. Moving on to SPY, looking at the daily chart, one of the things that I want to point out to you when you're assessing any chart, whether it's SPY or mega cap tech or any name, one of the quickest ways you can figure out what's going on is locate price in relation to the important elements on the chart. What's one element that we've talked about before? What are the relationships between the exponential moving averages? So here we've got the 200 on top. A little hard to see here, but the 50 is right here. Then we've got the 20. Then we've got the 8. Then we've got price. So we've got a full bearish stack on EMAs. That's obviously bearish. And we've got price below everything. That's as bearish as it gets. So the posture on SPY and on the daily chart is bearish. Now, if you're a nimble and active trader and SPY starts turning up, what are bullish check marks? Well, number one is recapture the 8 EMA, and then recapture the 20, and then if all the stars align, breaking out from a downtrend line is bullish. So that process is, the turn. So, but until you see that and price proves it, I think you've got to be, remain quite cautious, because we've been saying for a while that these rallies are bear market rallies that will fade. Now, knowing that and trading that well, as we've discovered, are absolutely two different things. There's knowing that this is or believing that this is a bear market rally, and making money on the upside and making the turn and making money on the downside are two different things. We made money here. We totally botched this. Did not make money here. Maybe even lost money there. Made some money here, a little bit. And this thing, did not make it even back to the trend line. Now, that doesn't mean we can't go up there today and do that. All I'm saying is, we've had a series of bear market rallies that have rolled over. So, and I think, and really, we haven't even started we're not even into the meat of the rate hiking cycle or the withdrawal of liquidity on QT. So, we could be just getting started here. 60-minute chart. Yesterday, we took we gapped down right out of the gate, came down to a support level, and this is where these levels really help. I mean, if you were watching this, we came down, it stopped on a dime, right where it was supposed to. Large volume over price bar, a lot of reactions along this line. If you caught that turn, got a nice run up, and finally it petered out and rolled over. But that was a nice bounce opportunity. If you're at your desk and you're an active trader, a lot of us in the in the trading room. Got pieces and parts of that. Some shorted at the top and got a little bit of a rollover. There was a lot of travel yesterday is what I'm trying to say. But now that the end of the quarter has happened, a lot of those shenanigans are the big shenanigans are gonna disappear probably for a while, at least until we get close to the July expiration in a couple of weeks. So you've got the pivot points there. We've got one fairly large remaining gap below, and we've got a 60-minute downtrend line above. That would be, if price were able to break out there, then you'd be looking overhead to see if it can come up and fill this particular gap. As we grind on through the charts, you're going to see a lot of similarities. Bear market rally, rollover, bear market rally, rollover, bear market rally, rollover. There is, we do have a wedge forming here. We do have price below all the moving averages, so that's bearish. We've got a full bearish stack on our EMAs, so that's bearish. But I will say this, as this wedge narrows, you can see, coming in here, maybe we go down and come up, but this has the potential of turning into something decent on the upside if price were to break out of this wedge and get some running room to the upside. So that is certainly something we want to watch out for and be ready for, but not jump the gun. I think there's going to be plenty of time if price breaks out of this downtrend line. Where depends on where it comes in, but let's just call it 290 right here. Plenty of room to the upside if and when we catch it. And I think there's a lot more risk that it rolls over right now than breaks out, but you just want to have your levels and your alarms and your head on a swivel to make sure you don't miss it. Yesterday, same kind of idea. We took a look down into this gap. I don't think we actually filled it, so I left it in there. We rallied back to fill the gap above, and then we rolled over. I've got a little downtrend line on coming off the highs and a little uptrend line coming off the lows. So maybe this is a little triangle here where we'll have to see how it ultimately resolves. But aside from the triangle, we've got levels right in here and a gap yet to fill here down to 275. IWM, really same kind of idea. Full bearish stack on the EMAs, price below everything. We still got a gap to fill here. We didn't quite all the way get up there. We got a gap here yet to fill. But you can see the downtrend line on IWM is way up there, and actually these intermediate downtrend lines are getting steeper and steeper to the downside. And you'll recall that IWM is already back to the pre-COVID highs, and I think that's going to be a really, really nice reference point on whatever chart that you're trading. Where are you in relation to the pre-COVID high? Because lots of charts are already there. Lots of charts are relatively high above it. So I think there's, in general, more ways to go on the downside. what I've done here, you can see that 169 is kind of an important pivot point on IWM. It's a large volume over price bar. You can see back here in the charts, support, 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 a lot of resistance, support, closed right back on that line yesterday afternoon. So 169, I think you can be long above it and short below it. But one thing I just, something struck out at me when I was taking a look at this chart. This looks a lot like a impulsive move down with a bear flag, right? Fast leg down, bear flag action on the way back up, and then a break of that bear flag. And, you know, should that play out, I mean, you can see the distance of this leg from 190 all the way down to 163. That's $30 more or less. If you go from the high point of the flag at 178 and you take off $30 from that, you come up with 148. And, you know, so that's way down there. So just on a measured move target of 148, if this thing plays out the way it's drawn, quite a ways more to go on the downside. So let's ramp it up here. Meta 60-minute chart. Got a falling wedge here. I really think it needs to clear 164 before anything can really get going. You can see here, and I've been watching this one pretty close. I've had a couple little trades here and there. Really hasn't amounted. Well, I did good over here. I got that one. But then since then, it's been a little tougher. But you can see 164 with this high volume over price bar and all the rejections along that line. I wouldn't get too excited on the long side, depending on what you're going to shoot for, of course, until this downtrend line and 164, 164.50 can get taken out. Then you can get some running room to 170 and potentially even fill this upper gap. Apple had the fast move down, bounce back up to trend line where it was rejected. Yesterday, took a deep look down, came down, notice that it found support right where it was supposed to. Resistance, resistance, support, support here again. Got a big bounce. Did not quite fill the gap, and then it rolled over a little bit. I think today your pivot point is 137. If it can recapture that on the way up, come up, try and fill this gap, and I think a big level is going to be at 140, and then you've got a downtrend line at 141 that will need to be taken out for bigger gains. Tesla really did not bounce as much as a lot of other stocks yesterday, but really didn't go down that much either. But look at the structure. Impulsive move down. You could interpret this as a flat flag, and then you get your measured move coming down here if in fact that plays out. Long way to go. We've got prior lows down in this 645 area. We had a little fake breakdown here. We know from back in the charts we've got a low at 620, and I've extended this downtrend line. That may offer some support down here at the bottom of this gap if it decides to go in that direction. I think today you can comfortably use 670 as a pivot for today. either above or below, depending on which way it breaks. Microsoft. One thing I wanted to point out here, well, let's just talk about the pivots. I think you can use this 5650 as a pivot. Price came down to 53 yesterday on the sharp move out of the gate. Stopped right where it was supposed to. Look left for structure, support, support, resistance, support, large volume over price bar. That's where it should have stopped. It did. So you've got a really good reference point there. I think if you drop below 5650, you got a decent chance to come back down to 253. If 253 doesn't hold, then you've got an open gap below. On the upside, I think your first resistance level is around 259. Now, what I've done here is kind of show you a scenario where this is your up leg, this is your bull flag, and so if price were to pop out above 259, you might have something going to the upside. But I wanted to show you the daily in conjunction with that. Why? Remember, all your signals, a level on the daily chart always trumps a level on a 60-minute chart. A level on a 60-minute chart is more important than a level on a 5-minute chart. So while we could look at that 60-minute chart and say, "Oh wow, it looks like a bull flag," when you go to the daily chart, kind of gives you a different impression. I know there's a lot of lines here, but if you could just focus on a full bear stack on the EMAs, 200 on top, 50, 20, 8, and price below everything, kind of gives you a different perspective on a bull flag. Now, that bull flag would have a lot more significance if price were above all these moving averages and grinding higher. You'd have a lot more faith that that really was a bull flag. So even if you may be trading shorter time frames, always go up a time frame or two to give yourself a complete picture of what's going on at upper time levels, because they will become more important than the level that you're trading. So anyways, here's that 253 level that we talked about. On this daily time frame, you can see the importance of that level. Why? Because it held here, it was resistance here, support, but then below 253, the volume over price support starts to fall apart or become a lot less prevalent, and so price can move faster in those areas. Here's Amazon. This big head and shoulders jumped out at me yesterday as price dropped down to this 102 level. I mean, it's pretty symmetrical. I mean, it kind of fits that textbook. You know, this is something you could show in a textbook on what is a head and shoulders top, you know, with 102 being the neckline. And remember, the way you get a measured move on a head and shoulders is you take the distance from the neckline to the top of the head, and so you got 102 to 128, that's a $26 move. So if this thing breaks down, the measured move target is 102 minus 26. So that's way down there towards 75. And that would be, that's 25% at this point with price at 100, split adjusted. That's a big move. Not saying it's going to happen. It's not a prediction. It's just a structure. This thing could have a fake breakdown and then rip. All kind of things can happen. All we can do is recognize the pattern, recognize what could happen, and then take the trade on a breakdown of 102 and then find out what happens. Price will tell us what's going to happen. And you never know if we go into some doomsday prolonged recession, who knows where things could go. So definitely have 102 alarmed in your list. And if you were sharp enough or good enough to buy 102 yesterday, then feather in your cap, because you got a nice $5 move off of that bounce. Google. I think your pivot here today is going to be 2200. We're kind of in no man's land here at 2180. Not really a whole lot around it. I would use 2200. Maybe you could get a move up to that level. If you get a breakout above, go up and try and fill this gap, and then move up towards 2245. Netflix. Came down, stopped right where it was supposed to, at the prior low. That's what you want to see, as a technician. That further validates this line. And so now, that's our first support on a down move. And on the upside, we see that resistance capped the move. We had support here, resistance here, support here, support here. That becomes resistance when price is below. We rallied off of 170, came up to 177, and then it was stopped. So I think you can use yesterday's level at 177, 177.50 as your pivot. Right here in no man's land might be a hard trade to take. Semis. Now we had Micron report last night, reported really dismal guidance, but the interesting thing was it didn't go down that much, so that might have all been priced in. And so I wouldn't expect, I'm short SMH, so of course I was hoping for a disaster. Everybody roots for what they have, so that might be an interesting tell. When bad news comes out and things don't go down, that could mark a bottom there. We're going to have to wait and find out. Now I've got a downtrend line on the 60-minute chart that you see, and we've got a gap that is yet to be filled back up to 210. But rally up into the trend line, fail. We could rally again, come up to 210, 211, and roll over. Here again, I want to show you, this is the SMH daily chart. And when you go down to a 60-minute chart, this little move here looks like a big rally. But when you go out to the daily chart, you just shrug your shoulders and say, it went from the went from the low side of the channel to the midpoint and got rejected. So, I mean, this thing has been in a pronounced downtrend for really the whole year, and until price can prove that it's not in a downtrend, I think you have to assume that it's going to keep going. I mean, that's how these things work. Now, does that mean on the low side of the channel you can't take a long there for taking a shot to move from 202 to 218? Sure you can. And if you get a breakout from 218, you could see 230. That would be a great trade. But as you approach that trade, you're saying to yourself, I'm trading a counter trend bounce. I'm trading to go from the low side of the channel to the high side of the channel. And as long as you understand that, then you know that once you get to the high side of the channel, chances are it's going to be rejected there. So that would be a place to take your profits. And if price surprises you and then breaks out, then you jump right back in on the other side with the outlook that we just broke out, and I'm looking for much more upside. So that's the way I would view that. ARKF really didn't have anything yesterday. Took a deep plunge. There was a rally and it rolled over pretty quick. So there was not a lot of juice there. Really trading almost near these lows. So I think the next key level is 1525, where you've got the largest volume over price bar on the chart. If you're interested in ARKF, I would certainly have an alarm at 1525. And then on ARKK, very much the same deal. You see the downtrend line being very orderly. We took a look down. I don't think we filled this gap all the way. We bounced up and then rolled right back over. I think your key level here really right in this 39 area. You could make a case for bringing that down to 38.50. Whether you want to draw that as a little support zone is up to you. But a break of that level would bring you back down to this 36.5 level. So I would be watching that on the downside. If price can hold the top of this gap and move higher, I think you got a chance to fill this gap and move to 41.5. As long as we're talking about alarms, I've been making more of an effort to set you guys up with a lot of chart setups where I'll usually call out, the levels of importance and include the chart. Sent several of those out over the last couple of days. And what I'm trying to do there is find charts that, number one, look like something's about to happen. Relatively close to a level, whether that's like Jinko Solar yesterday, pushing to the high side, McKesson pushing to the high side, threatening to break out of its consolidation range, or something that's teetering on the low side. And what I want you to do there is, whether you're sitting at your desk in real time, go there and set those alarms. If you're a trader that looks at this stuff at night, go there and set the alarms at that point. And if you're interested when it goes off, then you're there to take the trade. But I will do my best to let you know when that happens. But what happens a lot of times is, you'll get hit, if there's a rally, you'll get hit by a Gatling gun of either downside alarms or upside alarms. And, I can't be relied upon to tell you of the 12 names that just triggered. So set those alarms on your own. You'll get a better price if you jump on it rather than waiting for me to, compose an email it out, have the email get to you, have you open it, etc. So set those alarms in real time, and that way you'll be locked and loaded on either a breakout or a breakdown, and you should have a very objective level to take a trade. And you know what? Treat those alarms as trade advisories. If you like where you're at in terms of your positions and you don't want to take any more long exposure, or you don't want to take any more short exposure, just let the thing go. No harm, no foul. That's a lot better than, looking back 3 weeks later when the stock moved, saying, God, I wish I would have known about that. We've all had that happen. So I will continue to forward you interesting looking charts moving forward. And so do your part, set those alarms, and then you'll have objective trades in the pipeline ready to go when and if the market starts moving quickly, either to the upside or the downside. So if you're new to the channel, thank you so much for watching. If you appreciate technical analysis, getting a good morning game plan each and every day, please hit the subscribe button, the alarm bell. Join our team. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email address. Then morning, noon, night, over the holiday weekend, you'll get my thoughts on the market, and you'll always be in the loop. Plus, you'll get an invite to our trading room where a lot of sharp guys and gals are in there, all pulling together, trying to figure out this crazy market and put on some good trades. So I want to wish all you guys a happy 4th of July weekend. Find some time to recharge your batteries for the second half of the year. Have some fun with your friends and families, and we will see you back here Tuesday, if not before. So have a nice weekend. This has been Chris Buss for Traders Profit Compass. Talk to you next time.